Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Friday, July the 2nd, 2010. This is the day before our three-day weekend, start of our three-day weekend, I should say. We're going to go blow stuff up in America. Yeah, that's right, the 4th of July. We'll be back on Tuesday, July 6th, 2010. So let's have a look at the charts. A couple of announcements before we start. I just posted on the website at perfectstockalert.com, 100% free service. All we ask in return, you refer a friend. I just posted on there my article on the second quarter earnings and how I expect it will affect the market. So if you can read, you can check that out. All right, awesome. Also, starting on Tuesday, July 6th, first day back, our live trading room will be open, and it's going to be a blast. I've already got 10 picks just on the long side for just the day whenever sometime next week we'll get a bounce. So whenever that day starts, I've got 10 picks already sitting there waiting to make all kinds of money from. Awesome. You can go to our website and check that out as well. Read about that, and let's get to the charts. Here we go. A lot of things here. We got 1, 2, 3, 4, 5, 6, 7 days to the downside. If you do the math, look around this 6-month chart. That's not happened anywhere on the 6-month chart before, so we know we're in above average conditions, and people are looking for bounces. Because of that, because of the oversold condition of the slow stodge, different things like that. Also, we're starting to get hammer-like formations. Okay, these are weak hammers. These are not the type of hammer I like to see. Even this was called a weak hammer when it formed. But you know, it had strong volume behind it. Neither of these have got strong buy volume behind it, and it's a weak candlestick. So it's just really not looking all that great out there. Also, you'll notice the low point today was lower than the low point of Thursday. So if your high point, your low point, and your close, there's only 3 points on a candlestick that matter, and those are the high point, the low point, and the close. And all three of them were consecutively lower than Thursday. So I mean, if you're going to say a bounce Monday, well, man, you're taking a shot in the dark. I mean, there's you don't even have the slightest signal of a reversal, other than the candlestick formation looks somewhat like a hammer. But come on, I mean that's high risk. I'm not into that. If you want to play it smart and you shorted one of our calls on our website, basically anybody who's been following us for any length of time is making tons of money in this downtrend. If you're short and you're seeing a gain on the table, all you got to do, man, take your stop loss limit that was wherever and lower it down to let's say you shorted right here, lower it down to lock in some gain, and then now as you're looking for a bounce reversal, start taking your stop at the high of each day, like today it's Friday, so the high of this day, take it and set it right there. Okay, if she gets stopped out, you get stopped out. If she goes lower, you just keep lowering that stop because she can go a lot lower than you think she can. Trust me, she can. Quick look at the FTSE here. We're seeing the same oversold conditions. You're looking here on the slow stock just pulled back below the 20 line. You've got price activity trying to reverse already. But the candlestick formation is not a hammer. It's nothing whatsoever. It's just telling you it's going to actually go lower. Just wait for it. And you'll also notice you're now hitting the 30 line on the RSI indicator. Very oversold as well. So yes, you can see a bounce, but again, you are going to go lower. So keep that in mind. As a swing trader, you will let that bounce happen, let her pull back up here to the 80 line, and then start shorting again. Okay? That's how you play that game. This is the NASDAQ chart. It's a 6-month chart. Each candlestick is a day. You'll notice we've got 5 days to the downside here. Oversold condition there. Same basic setup. We've been selling off so much. People are looking for a bounce. And here's an example where you've got the potential intraday activity showing a potential reversal right here for that bounce. Note the low point here of 2061 followed on Friday by a low point of 2000 and 77. That's starting to show an uptrend right there. Now the close is still lower than the previous close, and the high is still lower than the previous high. But you are starting to get the first early warning signs of a potential reversal. You've seen that before, like back here and back here. All right, that was the first signs that you got there was something coming up. Okay, let's see, right here and right here. Okay, here, here. All right. And there's also lots of cases where these things will break down. These are the earliest signs, the weakest signals for the reversal. So don't be looking out there at some chart and saying, look, I've got 2 points that are slightly higher than the other. I'm going to go buy it because Christian said so. That's not what I'm saying. I'm just saying, looking at the chart, we can see it's trying. Okay. The main thing is if you're a swing trader and you were shorting this or the Qs or whatever, take your stop loss limit, lower it on down to lock in some gain. You should be just right there at today's high. Whatever today's high was on your chart, if you're not already stopped out, you should have a stop loss limit at today's high. So if she does turn around on you on Monday or Tuesday in the US and bump higher, you're stopped out and you're sitting there with a ton of profit. Nothing wrong with that. No. Quick look at the S&P 500, you'll notice we've got the same exact conditions on all of our charts. New lows, which basically tells you the overall trend is lower, and we might get a bounce. Like I said, I mean, we've sold off substantially, and we have got oversold conditions, so you're going to get a bounce in there somewhere. But all that means is you're going to get stopped out, which is what you want as a swing trader. Sooner or later, you're going to get stopped out, and it doesn't have to happen here. It could keep going. Um, in any event, you're going to get stopped out. When that happens, let it stop you out. Don't fight it. And then when she runs back up there to give you overbought conditions again, we're going to start shorting that guy again. Okay? Awesome. If you've not been to our free website at perfectstockalert.com, 100% free. All we ask in return, you refer a friend. And subscribe to our YouTube channel or I'll hit you with a stick. Yes, thank you. The disclaimer you can read. God bless. Enjoy your weekend. Have fun. Be safe. Don't blow your hand off. You need that for, making buy orders and sell orders and things like that. Don't lose that. And I'll see you all on Tuesday in the live trading room. Anyone who is registered, I'll see you there. Take care. God bless and enjoy the weekend.